Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Technical analyst. Silver's massive undervaluation relative to gold makes it irresistible. This is one of the main reasons why a lot of people do invest into precious metals, more specifically silver, is because it's cheap. It's so much cheaper than gold, it's easier to obtain, and there's more potential there as well, especially with the gold to silver ratio sitting so high. Silver is looking very, very appetizing, and investors are taking advantage of it left and right. I do want to say, if you are going to invest in the world of precious metals, I recommend the physical precious metals. You get to hold the coins in your own hand. If you can't hold it, you don't own it. That's the saying of the stackers. Physical precious metals is much better. Go to your local coin shop. Go to Atmex, JM Bullion, Provident Metals, wherever the case is. You can buy your silver for cheap, much cheaper than gold is. Silver is undervalued. Gold is overvalued, making it a lot higher of an opportunity to make some nice profits in the future when you go to liquidate your stack. So anyways, the link to this article from streetwisereports.com will be in the description if you want to check it out yourself. It's going to share a little bit about silver, a little bit about pessimism. It's going to go into the analytical standpoint of it, and so on and so forth. I think you are in for a good treat in this video, so before we start, make sure to smash that like button. Make sure you subscribe if you're new. I post daily videos every single day. If you want informed on the newest, latest information in the world of precious metals, I am your guide. This is your channel, so make sure you're subscribed. We're about to hit 26.6, I think, yeah, 26.6 thousand. We're like 4 subscribers away, so thank you so much for that on the road to 27K. So anyways, the way you see silver now depends on whether you see a glass that is half empty or a glass half full. And that's definitely true. There's different perspectives when it comes to precious metals. Some could look at silver and say, oh, it's a bear market. Prices are doing nothing. They haven't in several years. It's a bad investment. And others can say, wow, silver is extremely undervalued compared to gold. That means that the gold to silver ratio at some point has to correct itself, meaning that silver is going to outperform gold. So silver is a highly potential investment, right? So it goes on to say, if you are a pessimist by nature, you will be grumbling about its underperformance relative to gold up to this point. But if you are an optimist, as we certainly are with regards to silver, you will see it is maintaining the opportunity to pick it up cheap before it really takes off higher in a big way, which, as we will now proceed to see, is a fast-growing probability. So the probability of extremely bullish silver prices is definitely coming, and this article is going to explain why. We have been very wary of silver and silver investments in the past recent weeks, and with good reason, because if another deflationary downwave hit, silver was in a position to get really beaten down back into the dust. As we can see on its last 6-month chart below, after being smashed in March when stock markets tanked, it staged a recovery, but started looking decidedly timorous as it approached a zone of heavy resistance in April and its unfavorably aligned moving averages. It was set up to take another severe beating in the event of a stock market tipping into another downwave, especially as it has been forced gradually by its falling 50-day moving average over the past several weeks. But during this period, the Fed has been creating money at a stupendous rate to throw at the credit markets and the stock markets to prop them up, and there appear to be no limits on how far they're willing to go to pursue this objective. Needless to say, this action is hugely inflationary in its implications and will lead eventually to hyperinflation, although it won't start to kick in until the velocity of money increases, and we can expect gold and silver to anticipate this. Right now, there is no velocity of money because the economy is dead, but we can't expect them to keep pumping money until they get things moving. So very good points, very good points. The monetary policies, QE, pumping the stimulus packages in, and we're broke. We are $25 trillion in debt. We can't afford it. We don't have the money. So the ongoing money creation by the Fed is the reason that stock markets hasn't tipped into another downwave. They're trying to keep everything afloat. And the reason that gold has held up in recent weeks, if it continues, we can expect silver to take on key resistance in the $16.50 area that it gapped below March. If it should overcome it, it will change the trend from a current neutral 7 down neutral, paving the way for major uptrend to begin. So, we've been wary of silver in the recent past week because normally this would be a very bearish picture of a severe breakdown followed by a relief rally back to resistance. But these are not normal times. Fed pumping has averted, so far at least, another big drop in broad stock market, and it looks like they are going to be pumping an even larger scale going onwards, which will lead to hyperinflation, creating fertile ground for massive bull markets in gold and silver. Silver may therefore climb above the breakdown point shown in this chart, beginning the process of turning the picture positive. So, on the 2-year chart, we can see why, at this juncture, we continue to classify the trend as neutral down. Because of this quite strong resistance at the failed support in the $16.50 area, and still negatively aligned moving averages. A break above this resistance in the 200-day moving average, just under $17, will improve the picture significantly. So silver sustained quite heavy technical damage when it plunged through the 2 key support levels. In March, it quickly broke back above the lower one, but has understandably stalled out beneath the higher one as it waited to see if the stock market is going to cave again or not. It is now looking like the continued heavy Fed pumping will prevent this from happening. It will be very positive if it can now proceed to break back above the resistance in the $16.50 level area and above its moving averages. On the 13-year chart, we can see how much the breakdown in March caused by the stock market plunge broke silver down below the lows of a potential giant double bottom. And the fact that it has risen back in the pattern is positive, provided that it can hold recent gains and build on them. Volume indicators look positive relative to price, which is a good sign. Silver crashed through support at its lows in March, seemingly aborting the giant double bottom pattern. But the Fed came riding the stock market's rescue with huge bags of cash, and silver undid its breakdown. Given that gold is now well into the bull market now, silver looks amazingly cheap here, a situation which is unlikely to persist for much longer, given it looks very unlikely the Fed will take its foot off the money-pumping pedal. So silver's latest COT looks much more positive than gold's, which rather suggests that we can look forward to silver outperforming gold for a change before too much longer. Let me repeat that. We can look forward to silver outperforming gold for a change before too much longer. This chart certainly indicates there is plenty of room for silver to advance from here. So, silver's COT is looking much better now, with the large specs enthusiasm having cooled considerably. Readings are at levels that are close to being outright bullish. That has certainly allowed plenty of room for silver to advance from here. Just how undervalued silver is relative to gold is made dramatically clear by the 20-year chart for gold to silver over the shown below. Every time this ratio has dropped to a really low level, it has led to a major sector bull market. Now is much more extreme, suggesting both that the looming bull market will be big and that is likely to start soon. This stunning chart shows silver is record cheap relative to gold, which is a sign that a major new sector bull market is imminent. Observe how extreme lows in this ratio lead to sector bull markets or at least to significant rallies. With respect to silver's relatively rotten performance compared to gold in the recent past, this is a good point which draw your attention to an excellent article by Jeff Clark. So, in addition to silver being very cheap relative to gold, there is now a big difference between the paper price for silver and the physical price for silver, which, as with gold, is viewed by very auspicious development. It is very important not to let this large premium put you off buying physical silver if you are minded to, because this premium is likely to get even bigger, and if silver starts to take off higher again, physical silver could very quickly become impossible to obtain. And we should stop there for a second. That's definitely true. We saw silver supply diminishing, but the demand booming. Low supply, high demand shoots the price up. Silver scarcity is a real thing. Mexico and Peru, some of the biggest producers of silver, they acquire more than 40% of all silver production on a global scale, abandoning silver mines, shutting down silver mines, and we also see demand rising, especially with 5G technology and such. So, the possibility of silver being impossible to obtain is definitely here, especially if you do want to obtain it paying extremely high prices. That's why you got to buy silver for cheap right now. Use the cloak of recent weakness to get in on board as fast as you can. Even if a worst case scenario eventuates and the stock market drops despite the Fed pumping and silver drops back to recent lows, so what? When hyperinflation hits silver, it could easily end up at $100, $200 an ounce, maybe much higher. So why quibble about a possible $3 or $4 drop from here, which in any case is considered much likely now? So that's definitely true. What's the point of whining about a couple dollar drop or a couple dollar gain if we could be talking about $100, $200+ silver here? This article is extremely bullish, but it's extremely accurate, and I like the way they brought in the charts and showed the patterns and everything. So anyways, I hope you enjoyed this video. If you did enjoy this video, make sure to smash that like button. Make sure you subscribe. I'm posting daily videos every single day. I'm giving you the newest, latest, freshest, most informative information so you can stack your silver, so you can strategize more profitably. So make sure you smash the like button. Make sure you subscribe. I post daily videos. This was Silver Slayer. I'll see you guys soon. Peace.